Hi, this is Zak Mir with the Bulletin Board Heroes here at Zak's Traders Cafe for Friday, the 1st of March. Starting off with the FTSE 100, which has bounced off a rising 50-day moving average. It's taken 3 days to do that successfully so far. That was around 76.30, and above that we're still looking for the top of that rising trend channel from back in August up to 78.30, hopefully by the end of this month. Below the 50-day line risks a test of the 200-day moving average, but with an RSI rebound at neutral 50, that looks increasingly unlikely, which is perhaps good news. Moving on to the DAX, where I believe it's record highs, even though the country is in the EU. Can't believe that, but here we've managed to hit that resistance line projection from back in September, 17,700. Above that, we're looking for as high as 18,400 by the end of this month, even though we've come up a long way since the end of October. Potential support is the sort of late February resistance around 17,400. So let's see if the market's strong enough to withstand any selling pressure. On the most we're looking for on the downside is the floor of the channel there from October, 17,200. But ideally, we make further progress within that rising trend channel from October. Moving on to the Dow, and here you can see that we are nestled just above the floor of that rising trend channel from October. Top of the channel there heading for 41,000, probably looking for that now realistically by the end of next month if we get it at all. On the downside, the 50-day line and basically February support at 38,000, the worst that we're looking at, but ideally we stay above the floor of the channel there at 38,600 and keep on going. The highlight of the moment by quite some margin is Bitcoin, and here we're consolidating above 60,000, which looked as though it was very high just a few days ago, but above 60,000, we've got that resistance line projection there from back in September. That's around 65,000, and hoping for a May 2023 resistance line projection heading for 70,500 by the end of this month. On the downside, if we do break down, then 54,000, probably the worst that we might be expecting. Moving on to gold, which looks rather pale in comparison to Bitcoin. Obviously, gold once was the Bitcoin, but now Bitcoin's taken it over. Here we've got a break of that December resistance line there, and we're above the 50-day line around 2043, the December resistance line there around 2050. The longer we stay above that, the greater the chance of a move to 2100, hopefully in the first half of this month, and then maybe by the end of the month. The best case would be 2180, but we might have to save that for back in April. Downside limited now to 2010, which is the floor of that rising March 2023 price channel. Onto the stocks, and motley bunch as usual. We're revisiting Atlantic Lithium, which hasn't actually gone up very much, but it might be near the end of its retracement, rather irritating retracement there from the upper 20s back at the beginning of December. We've managed to push through the 50-day line, 23 quarters for the first time since mid-December, and we're at least looking for a little run up towards the 200-day line, 24p, over the next 2 to 3 weeks, certainly before the end of this month. Best case at the moment is that we head up to the top of that broadening triangle from July last year at 31 pence, but that might have to wait for next month if it happens at all. Returning to Avacta, which obviously was rather painful midweek. Here, I think you'd probably give the shares 7 or 8 out of 10 for staying above the 50 pence fundraise level. So that is a plus. RSI still at 18, still near the lowest level. So that might explain why the shares are able to hold above 50 pence. But the best case here is that we're looking for the shares to fill the gap or make a near attempt at filling the gap up to 67 pence sometime later this month, even if they fall back again after that. Below 50 pence, probably we're looking for a line of support, which I'm just about to draw now, which is from back in the beginning of last year. So maybe towards the 45 zone, maybe 44, 45 pence. But at the moment, we're not really looking for that. We're looking for at least a dead cat bounce on Avacta. On to one of the stars of the early part of the year, early part of this very young year, which is Corcel. Here we've got this sharply rising 50-day moving average. That's around 0.89. Above that, we are looking for 1.1 pence, which was that double top there at the end of January, beginning of October. Big picture is up to 1.5 pence, but that might have to wait for the end of April, or maybe even after that. On to the next situation, which is another fundamental star and a decent charting situation. Cornerstone, here we have the big rally basically from the beginning of December with the unfilled gap to the upside, and we've been in a rising trend channel from August. What we're looking for now is an end of day close above the rising 50-day line there at 29.75 pence. That could then start at least an initial rally up to 35 pence and February resistance. Interesting funding situation from eEnergy today, where I believe NatWest has been very generous. Thought it was TSB, which is supposed to be the bank that likes to say yes, but obviously NatWest can do that as well. And here, shares of eEnergy gapping up through the rising 50-day line. Initial target here, 9.5 pence. Maybe we can get up to 12 pence by the end of this month. Ideally, we stay above 6.5 pence on the floor of the 2023 rising trend channel. GCM, one of the big stars of yesterday, and it's trying to consolidate at the better levels, which is good news. As you can see before, whenever there's been a rally here, it was sold off on the second or third day. So far, we're holding up quite strong. And the view now is that while we're above 3 pence, which was resistance on the way down, at the turn of the year, looking for 4.5 pence maybe by the end of this month. But just not crumbling after 2 or 3 days would be a victory at GCN. Genedrive is next, requested stock, and here you can see that the shares are making some effort to rehabilitate themselves. We've had we've had a few good candles in the recent past, but breaking neckline resistance of 5.25 pence, the shares do have a potential chart target there to hit 8 pence, maybe by the end of next month, ideally, obviously, a bit sooner than that. But there is still quite a lot of work there on Genedrive to do to break the ongoing bear run that the shares have delivered. Wanted to go on to ITV. It's not the type of stock we normally look at, but given what a disaster, or what a dog it's been, I think that's probably the fair thing to say over the years. Maybe this could be the end of the pain. As you can see, it's been a horror story since 2015. The current situation is that we're within a broadening triangle base, top of the triangle there at 68 pence. And at least while we're above a recent resistance at 62, there's a chance of the shares getting up to that level. But I suppose getting up there would at least mean that we've got a decent follow through on the bear trap gap reversal that we've had, massive gap to the upside today. That is always going to be of interest. Moving along to Optibiotix, and here looks as though we're going to try and have another run to the upside, rising 50-day line break of that resistance line there from back in August. Best case here is that above the 50-day line at 25 pence, we could head up to 45 pence by the end of next month, and maybe repeat that July rally that we had last year. One of the stars of this week has been Powerhouse Energy, and it's interesting that the shares basically went back to fill the floor of that gap there from August around 0.67 pence. In fact, they bounced a little bit higher than that, and now have gone back above the old August resistance at 0.83. The view now is that we've still got a chance while we're above that old August resistance to head up to 1.3 or 1.4 pence in the first part of this month. The other thing to notice, which is quite encouraging, is the way that both 50 and 200-day lines are now rising, which means we're in the run-up to a golden cross, and the run-up to a golden cross tends to be the strongest part of the cycle. It was interesting that somebody was speaking to me about Saietta, saying that the company is likely to be doomed, let's say, being polite. And the shares are after that conversation are up, they're up over 50%. Current situation is we've got a single-digit RSI, which lends itself to at least a little bit of a rebound. Near-term resistance at around the 0.72 pence level. So if you are a keen bottom fisher, then maybe the 0.7 pence area is the area you might target, but that's certainly not for widows and orphans. On to Sondrel, which I've got a soft spot for at the moment. Here we've got a consolidation above a rising 50-day moving average, which is normally a good thing. It means that the top of the range, recent range of 13 pence, could be on tap. Best case scenario here by the end of next month would be a move up to 20 pence plus, but has to be admitted that does feel like it's a long way away, even though we have a rising trend channel base based at the 50-day line at 7 pence. Finishing off with Verditek, where we have the mighty Bob Holt taking the reins, and it'll be a new Business model for the company, EARNZ is the new name for the company, earns, and here we're looking for the shares to at least break through the 50-day line, 0.13. Above that, we're looking for 0.18 at the top of that broadening triangle, now that it seems safe to come out for the bulls. Ideally, we stay on the right side of recent resistance at 0.09 or 0.1, really, to be accurate. That's it for me today. More updates over the weekend.